and as I often talk about the tension of being a trader versus an investor. And look, we're in a period of time right now that is seasonally
السلام
strong
عليكم،
for
مرحبا
risk
بكم
assets.
الجميع في
And so
هذا
I wouldn't
اللايف اللي
necessarily fade this
عنده
move right
المغزى ديالو
now.
وعنده الهدف ديالو. هذا
I
اللايف
think
هذا
that
اللي هو
through the
الاجتماع
end of the year,
ديال
we're likely to
الفيدرال
continue to see
ريزيرف
people
ولا
looking
البنك
for risk-on
المركزي
opportunities.
الأمريكي
But
اللي
the second part of
غيعطينا
this
بزاف ديال
is,
الإجابات على
the message is loud and clear.
التحول ديال
We're
السوق،
going
واش
to keep
غنمشيو
raising
الفوق ولا
rates
غنكملوا لتحت.
until we get price
وتقريبا
stability, and
هذا
that's
هو
probably going to
أكبر
go into
ميتينغ
2023.
اقتصادي
And at some point,
في العالم
this
كامل.
rally
اوكي.
will fade, but I don't think it's going to happen right now.
What do you think will
اخر
trigger the
ميتينغ
fact
غيكون
that
هذا
we
هو
are
قبل
probably
الاخر،
going to
واحد
get some sort
غيكون
of
المهم
tapering
كان واحد
off in the
البارح
pace
واليوم
of rate
تيكون
hikes,
بين 1
certainly
و
by
2
early next
نوفمبر،
year?
والاخر غيكون
I
تقريبا
think
في
that
ديسمبر.
we're
كاين
looking at
الجدول اللي
these,
ممكن ترجعوا ليه وتشوفوا
and you
بالضبط
look at
امتى
the
هاد
multiple
سميتو
attached
هاد
to them, you
الاجتماعات
either have to
كتكون.
say that you have
واليوم حنا
earnings
في
growth
بلومبيرغ دايرينها كما
that's
كتشوفوا
well
بلومبيرغ
above what you would expect in a
هنا
recession,
لايف في يوتيوب،
and therefore
ممكن تمشيو ليها وتفرجوا
multiple
فيها
is good.
براحتكم.
I think
حتى هما
what
تيهضروا على نفس
is
الاجتماع اللي
that
كنتسناو
earnings
فيه
at
ديال
best are going to be
الفيدرال
flat,
ريزيرف،
and
واللي
probably we'll
مختصر
see
بالاف
S&P earnings drop to
الاف او
something like
سي.
$200. When you look at recessions in history,
البيتكوين دابا راه
a 15
تقريبا دار
times
واحد
multiple on
قفزة
$200
نوعية،
would
لأن
be what you would
الدولار
expect. So,
نقدر نوري
that gives
لكم
us
هنايا
room for substantial
رجع،
downside. And,
لأنه
that
الدولار
kind
رجع،
of a
البيتكوين
scenario that
طلع
I'm
الفوق.
talking
كما
about
كتعرفوا بأن
looks very
البيتكوين هو
similar to
عكس
the downturn we got in
الدولار.
2021, or sorry,
ها هو الدولار،
2001,
لأن الدولار
after the
دابا
internet bubble faded. And so, I
نزل
think that
بهاد الهبطة
we
هادي.
ultimately will have to
نزيدو
find
شوية ديال
lower lows, but I think the catalyst will be
الانتنسيتي،
earnings.
As we've gotten inflation data that has
نحيدوها.
surprised to the
فوالا.
upside, as we've gotten labor market data that
اون فوا
surprised to
كي
the
دابا
upside at the fastest
البيتكوين
pace, going back to
الدولار، سمحوا
April,
لي،
even as
الدولار نزل
people
قبل،
understand the
يعني حيت
resilience
دابا هذا هو
therein.
الوقيته ديال الاجتماع
Are you
كاين مع
changing your
الجوج ديال التوقيت
estimation
ديال
of where the
نيويورك،
Fed will have to go at that base rate? How high
يعني
they'll
مع
have to
الجوج
bring it,
بيل هو
given the
يتفرق
lack
على
of
تحت نزل
sensitivity right
الشرطه
now
ولا
in the
الدولار.
underlying
اوكي.
economy?
وانا اصلا كنت متوقع انه
Look,
ينزل
I
على
think that is
حسب
on footing that I
هنايا
would
ها هو
expect
فين
already.
كندرسو، ما درتوش
I
يومين
would
هادي
have
ولا 3
thought
ايام
that
قبل كاع
price
ما
pressures would have
يدير.
faded faster.
اون فوا كي
So, I think
شفنا هاد
we
الهبطه
have
ديال
to be open to the
الدولار
idea
نزلات،
that
طلع
the
البيتيسي في
Fed
البلاصه.
may end up
شفتوا هاد
significantly
الطلعه هادي
higher
اللي
than
دار،
where our
نحيدو
calls
كاع
with
هاد
an
لي تشارت. شو
expectation
هادشي
of
هاي
something in the 5 to
هادي طلعت
5.5%
تقريبا دار
range
في
in the
ديريكت ل
first half of
700 ولا ما
next
عرفت
year.
800.
And
الا
but
كان
having said that, I am
الاجتماع
concerned
بوزيتيف بمعنى
that that
ان
kind of
التضخم
repricing
كينقص،
will be
ف
destabilizing to financial
هذا
markets,
غيكون
and
واحد
that we
المعلومه
could get
بوزيتيف،
ourselves
اخبار
into a
جيده بالنسبه
situation where
للمارشي
we have a financial
وبالنسبه
accident
لجميع الاسواق الماليه،
like we
منها
did with
الستوك، منها
long-term
الايكويتي،
capital or
منها
orange county,
الفوركس الى غير
which could
ذلك.
cause the Fed to have to abort even though it's
فجميع
going to raise
الاسواق الماليه،
rates.
فهي
If
اليوم
you've just tuned
كتسنى
in,
هذا
this is our
الميتينغ
special
هذا.
edition
والا
of
درتي
Bloomberg
جيتي
Surveillance. The
اليوتيوب
Fed
هنا
decides
ودرتي
the decision
مثلا
behind us. The news conference still in front of us, about 21 minutes away. 75 basis point hike from the Federal Reserve. And if you open up the statement
حيث
in the
اليوم
third
كيتوقعوا ان
paragraph,
واقيلا قد
from the
يزيدوا
line that reads
الهايك
the
انترست
committee
ريس
onwards.
تقريبا
Take a listen to this.
ب
The committee
75
anticipates that
بوان.
ongoing increases in the
وإلا
target
زادوها ب
range will be
75
appropriate in
بوان راه
order to
غادي
attain
تكون
a stance on
شوية
monetary policy that
قضية
is sufficiently restrictive to return
قضية
inflation to
غتكون
2% over time. In determining the pace of future increases in the target range, the committee will
غنجبدو
take
بعدا
into
السيت
account
ديالهم.
the
فوالا.
cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. The market off the back of that rallying up 0.6% on the S&P 500, on the Nasdaq up about 0.5%. The bond market rallying too. Yields are lower by about 10 basis points at the front end to
ديسكتوب
4.45. On a 10-year, we're down about 5 basis
كنا واحد
points to
اور ولا صيفطنا
3.98,
هنايا.
and the dollar a whole lot weaker. Euro dollar positive 0.8%, just short of parity, Tom. Euro dollar right now 99.53.
Yeah, and as Priya Miser talked about curve flattening, her trade is to
حيدو
go
واحد
out once a
التخربيقة
month,
في
so I think it's
الاخر.
working right
فوالا
out in the last
هذا هو
14 minutes into 46
اذا هذا هو
basis points,
جدول
which given us spread from 51
سميتو الاف ام سي،
So John, I would really
اجتماع ديال
emphasize
الفيدرال
here
ريزيرف على طول
the
السنه.
fancy math
تلقاو
of
هنا حتى
what
ديال
you just
2020
said in
2021
that
نجيو نكليكو هنا
carefully set,
2022.
I'll say it's a set of two sentences
فالاجتماع
that are
اللي
going back
اللي حنا اليوم
over the
معولين عليه هو
cumulative
هذا
and then
ديال
they're
1 و
slowly
2
forward
نوفمبر،
trying to
غيكون
game
مع
out
جوج
the
ايام اللي
lags
هي
on
دابا
the
جوج
FX.
تقريبا
It's
ديال
just a
نيويورك،
lot of
راه بدات
mathematics
تقريبا
going on
داكشي اللي
here.
You've got to think
كتشوفوا
about
هنا
how much
حتى
time we've had. We started the year at
اللايف
0 in
ديال
interest rates. We've just got another
بلومبيرغ
75 basis points.
هذا
A
بلومبيرغ
number of
تيهضر
months
تقريبا
ago,
على
in
الاقتصاد،
fact,
ما
in
تيهضرش على شي حاجة أخرى.
we were doubting whether they would deliver a 50 basis point hike.
وكيحاولوا
We've just had 4 75
يجمعوا
basis
ولا
point
يهضروا على
hikes from this
الفرضيات،
Federal
واش
Reserve.
غادي
So
يزيدوا
therefore, it's
الانترست
175,
هايكس.
Tom,
ملي
from
كنقول
zero
الانترست
in
هايكس يعني
March. That's a lot of
كيزيدوا
timing,
نسبة
about 8
الفائدة،
months, Tom. Then we're going to talk about some
ولا
more. And to
غينقصوها
your point,
بالنسبة
they're very cumulative hikes we've seen already.
للانفليشن
There's some more in our future, and then
ولا
there's
ديال
the lag,
التضخم.
the time that those
إذا
hikes
نتمنوا
actually
هذا
start to hit
هذا
the economy and
هذا
cause a
الميتينغ
bit
هذا
more
ولا هذا
momentum.
الاجتماع اللي غيطرا يكون
John,
بوزيتيف.
and I have no special knowledge that Vice Chairman
لأن
Brainerd was part of cumulative tightening. I was just
تقريبا
gaming them and
خاصنا واحد شوية ديال
speculating
الصعود
that
باش
links
I think
could
you're right to
come from
speculate.
it.
It almost echoes what she
Right.
said
على
in the
الأقل
speech
نمشيو
in
حتى ل
Davos.
25 ولا
Clients swap
حتى
with us
تقريبا
now who
29,000
really
وديك الساعة
understands
ننزلوا
the
حتى ل
dynamics of the
14 ما كاينش
axis
مشكل.
for a Fed in crisis coming out of a pandemic. Diane,
إلا شفتو دابا
we
تقريبا
went
بزاف
very much.
ديال
I don't think he's
اليو اس
studied this at
يلد،
Michigan.
هذه اليو
Running
اس يلد
God's name
30 عام
down
الباند
stock is
ستوكس نمشيو
cumulative
نشوفوهم
tightening.
هنايا.
Oh, I think we do
عندنا
know
في
exactly what it
الكورليتد
is. It's
ماركت
the fact that we're 150 basis points ahead of what the Fed thinks is
نشوفو شكون
neutral
اللي
now,
طالع مزيان.
and it's nonlinear in terms of its impact. We've already
هذا
seen
بالنسبة
the destabilizing
لا
effect
هذا
of rapid
ديال
rate hikes
الألمان.
in the
نشوفو
housing
ديال اليو
market.
اس، ها
That
هي
is,
شتيها
you know, the most
نفس
interest rate sensitive sector
الطريقة.
out there,
إن
but
فوا
it's really
كينزل
been
الدولار
quite
تفرقع
stunning and
الفوق.
also starting to show up in prices
هذه
as well.
البوندز
That's something that we know
أو
from the
الأصول.
housing subprime
لا هذا
crisis.
الداو
They
جونز،
actually showed up
مؤشر ديال الداو
inflation
جونز.
and
هذا
inflation measures much more
المؤشر
rapidly
الاقتصادي
too, and
ديال
the Fed's starting to look at
الأمريكان.
that. And
أوكي
I don't think it was just
زاد
Lael Brainerd
مزيان.
alone. I think this
نمشيو
wording
نشوفو
allowed the Fed to do a
حتى هذه
unanimous
غادية
vote. First of
مزيانة.
all,
هذه
it's
اس
in
بي
line with the
500.
Fed's,
اس بي
you know,
500 هو
accelerated
مؤشر ديال
economic
500
projections. They were expecting
أحسن
50
شركة
basis
في
points in a
أمريكان.
quarter, so it's in line with that.
اوكي هو
It's
طالع تا هو
also
داير
important
نفس
though that
الشيء.
one
نمشيو
didn't
دابا
just have
نشوفو
Lael
الأصول
Brainerd lay
الأمريكية
out
ديال 10
financial
سنين
stability
وديال
issues. You had
اليابان.
Mr. George talking about not the
ديال
terminal
اليابان
rate,
نازلة.
still
نشوفو
wanting a
ديال
high terminal
الأمريك.
rate, but getting to more
هي يو اس
measured rate
30
hikes from
ديال 30
here
عام.
because you don't want to break the system while you're getting
رجعت
there and you're already into
ديال
tight monetary
الإنجليز
territory. I
30
think
تا هي ديال
also we had,
الإنجليز.
you
هي
know,
راه باغا
Charlie
تزيد
Evans
الفوق،
talking
باغا
about
ترجع،
the
باغا
need
تطلع.
for, you know, calibrating rate hikes.
والله
And then you
كتعمر
heard
إلا جينا
Daly
نديروها في 5
also talk
دقائق
about
تبان
it.
لكم
I think all of this
مزيان.
enabled, not only is it a very good description of where the Fed should be right now, and it's the wrong way to
واحد
take this,
جوج.
that the
اوكي
Fed is done, and that
نشوفو
they're
ديال
not
10
going to
سنين
trigger
ديال
some pain in labor
الأمريكان.
markets because they've been very clear that that is in fact what they think needs to occur
هاي تا
as
هو
Rich
باغي
laid out,
يزيد،
and they've
باغي
got
يطلع
blunt
تا هو.
tools, but it did prevent a dissent at this meeting from a growing minority within
وكما
the
قلت لكم
Fed
قبيله
who are
جينا
really
نديرو
looking
هنا
at how they need to think about rate hikes now that we're in tight territory.
Diane, let's go back
هنا
to
هي
all of your
الكلابي
work
ديال
across
اف
the
اون
Midwest for the
سي
years with a different
ميتينغ.
view than global Wall Street and certainly New
كلشي
York Wall
تقريبا
Street.
كيتسنى
In
هاد
your mind,
الميتينغ هاد.
when does inflation
5
break? When does
سوايع
it
3
really
سوايع 4
begin to
سوايع
come
كلشي
down,
تيهضر
not to
عليه.
2%, but just the
وهاد
trajectory begins
الشخص
to
هذا اللي
break?
تيديروه
What's
هنا
the
في التصويرة
timeline there?
هو
I think we're going to
المتحدث
start to see
الرسمي
in
باسم
midway, the first to
البنك
second
المركزي اللي
quarter of
هو
next
جو
year
باور.
start to come down.
اوكي
What really will be interesting is how
أم
rapidly housing prices ultimately fall. I do think we're going to have a national housing price correction. Of course, we've had a tremendous run-up in housing
كاين
prices. There's
بزاف
still a lot
ديال
of
الناس هنا
cushion
كتهضر
about the
عليه،
subprime
ماشي واحد
prices,
ماشي
but the
جوج.
more rapid that occurs, the
معليناش هذا
shorter
هو
the bonds to when
المغزى
that
من هذا
that shows
اللايف
up
هذا.
in
كنت باغي نقولوا
measured
لكم البارح
CPI
ولكن
and measured
للاسف
PCE,
ما
which
بقاش
are
عندي الوقت باش
important for the Fed, but also more
نهضر عليه.
importantly, what it
مي
means for renters and people
تسناو
home ownership
ها هما
prices.
كما كتشوفوا هنا
Those
راه كيبينوا لكم
actual
تقريبا
inflation
الاصول
rates.
ديال
And I think
عامين
the
10
Fed
سنين
is going to
30
be
عام اللي
watching
يلاه
those very
ضربنا عليهم
closely. And I'm a
طلع
little
دابا
bit more optimistic that that could come
راه
off
طلعوا
faster than
بوزيتيف.
the Fed expects as we get into
فيد ريت
2023.
7.75.
Meanwhile, Steve Chivarone of Federated Hermes tweeted, for those looking for a more dovish Fed, they need to call the inflation data and ask it to start cooperating because so far it has not. And I do think, you know, John, honestly, this is like, you know, over to you
نشوف ندير لكم من
CPI because
الترجمة
you're not going
بالعربية
to get on board. What are we doing
تبدا
here?
معنا
Look,
شوية.
I hate to be somewhat controversial, but is there real news here? And the reason I asked that, and Dan, maybe you can help me out, is wasn't this just implied by the dot plot that came out at the last Fed meeting? There's going to be some kind of step down here from 75 to 50, and aren't we just at the mercy of the next two CPI prints regardless?
Exactly, and I
هذا
think that's,
كاينش.
you know, sort of the idea that this is a step down, that this is a change, it's not. And that's why I said it's consistent with the SEP, the Summary of Economic Projections. This is what the Fed was expecting to do. They verbalized it more clearly, and I think that was important to prevent a dissent. But it really is where the Fed was going, and it's not about the terminal rate. They're still looking at as high a terminal rate as they need to derail inflation. Whatever my views are, they're going to keep going until they really see a significant deceleration and they'll hold rates high for a longer period, and they're willing to take that pain. That's what the 8 minutes, 34 seconds in Jackson Hole was all about.
The 8 minutes and 34 seconds heard around the world, more than probably any of his other many minutes. Scott, I want you to weigh in. Diane commented on this too, this fear of a financial accident and how that's an outcome that the Fed does not want to see because it will cause them to step back before their work is done. What's your sense of the potential trigger point, right, of how close they might even know that they're getting before they trigger some event at a time when you've got private markets that aren't really trading that much, and if they are, it's at pretty distressed levels that people kind of sweep under the rug, and you've got public markets that seem very orderly?
Well, I think that that's the great mystery that the Fed is trying to deal with. Because these financial accidents, just like what we saw with the Bank of England about a month ago, nobody sends out an email ahead of time or a warning they're coming. And so the idea that something could come out of the dark, I think, is helping them precipitate this idea that, hey, let's talk about the terminal rate. Let's ease into the idea that we could be slowing the pace down to get inflation to stabilize and come down. Because I think that, over the last 6 weeks since the last meeting, when you look at what's gone on in Japan with yield curve control and the depreciation in the yen, and then the unexpected collapse in gilts.
فوالا ها هو الشانيل اليوتيوب ديالهم. ياش كنت كنقلب باش نشوفوا الاجتماع مباشرة. الجوجونس اجتماع مع الجوجونس الإخوان. تقريبا أنا باقي واحد 10 دقائق الماتش. شحال نشوفوا نيويورك سي تايم تقريبا كنظن راه باقي 10 دقائق.
Of course, I'm not on the banking side of the firm, but it's been really interesting to note that M&A activity has remained relatively robust, and I think that has to do with the fact that balance sheets in corporate America are pretty
شوفوا
strong
الدولار.
as a result of the fact that they had corporations had years here to borrow money at low interest rates. And when you look at deals that are getting announced these days, like Tenneco, that I believe Apollo is doing, there seems to be no slowdown in M&A activity or financial transactions.
Diane Swank, let me go to you on the partition of GDP. It's been a theme for us, and it's something that the Fed has to confront. GDP is being held up essentially by net exports as a generalization. How flat on its back is the American economy right now? I think I lost Diane. Diane, are you there?
Oh, sorry.
Okay.
Yeah.
Okay. How flat on its back
I'm
is
here.
Diane? How flat on its back is the American economy right now?
Well, it's interesting that the majority of Americans think we're either in a recession or on the edge of a recession, and that's because inflation has eroded all that they've gained in wages and then some, so they do feel like they're losing ground. But, it really is pretty fascinating to see how much the consumer slowed this year.
نديباسيو 21 ولا لا؟ هذه مسألة 10 دقائق فقط. احنا دابا في 20,700.
It's something that Rich made a point about.
اجتماع مهم بزاف.
And that's before all these lags have taken effect.
255 20
slowdown in the U.S. economy.
161 900.
I think it's really important to look at we've got a strong dollar. We've got weakening growth abroad. Growth abroad is weakening more rapidly than it is here. The trade deficit's not going to provide the buffer that it did as we go into recession either. Now, this isn't going to be the same kind of recession we had in 2008, 2009, or the pandemic recession. We've got a lot of pent-up demand in services, but the goods side of it is already contracting. And we're going to see more contraction in the goods side. We saw factory orders fall quite dramatically in September. and led by export orders. Those are really important things to think of when we're looking at the trade deficit helping us out. And I think that is, with a strong dollar and the kind of global scenario we have, and the ricochet effects. You know, when the Fed raises rates, they ricochet around the world, and the risk is that they come back and shoot us in our own foot.
زادوا 0.75 هايك يعني زادوا اوكي
Gets it, but they also
هذيك
do
بوزيتيف.
believe that in order to derail, with all that slowdown, inflation has still been persistent. And that means they believe they've got to raise unemployment in order to really bring demand to meet what they see as a supply
Stock market news live
Dan,
update stock bounce as Fed hikes by 0.75 hints at slower hiking pace.
just said our view is that the Fed is an independent agency and we respect their
Stock were
independence.
firmly
The Fed
higher
actions
Wednesday
help bring
afternoon
inflation
following move
down.
by
The White
Federal
House has been
Reserve
pretty down the line about
rises
this, straight
benchmark
down the middle.
policy rate by
Other Democratic senators have not been.
75
Dan,
basis
how do you
point
think this
for
Fed, this institution,
straight
will handle
time.
the politics of this moment?
With market expectation,
Jay
potential
Powell
slow
is
pace of
remarkably
monetary
good
tightening
at the
ahead.
politics of this, and he's had to weather a lot
Gained
in his
0.6
tenure in terms
jumped
of
meeting its many points. 0.6
political
foods,
influence,
technology
let's just
heavy
say.
Nasdaq
And I'm
composed ICS
amazed
was
at how little
0.3
that actually phases him. It is going to be hard. I mean, remember, Paul
undermining
Volcker
his
was dealing
future
with,
increase
you
in
know,
the target
protests. People
range.
were
The
sending
committee will
him
take
keys
into
to the
account
homes
the
they weren't
cumulative
selling. They were
tightening of
sending him
monetary
keys to the
policy.
cars they weren't selling. He was, you know,
The
this was
lag with which
not
monetary
an
policy
easy
affects
thing
economic
at
activity
all.
and inflation,
Don
economic
Cohn,
and
who
financial
worked for
development.
Paul
The U.S.
Volcker
Central
back in
Bank
the
policy
day.
statement said.
Paul Volcker would give them sort of
We'll
symbolic
tune
purple
in
hearts when
for
they would go out
whole
and do
press
listen events and
conference
have
at
people
3.
complain about the
مازال
hardship that the Federal
مازال ما
Reserve
وصلتش
was
جوج ونص الإخوة
doing
جوج
to the economy.
23
So
أوكي.
this is not new, and it's not new for this Fed
SP
chairman
500
Dan, some people might
and I think that's important.
0.5 that it hasn't started, that that's still in their future. And that the pass they get at the moment is because at the
كاين
moment the
سمية
dual
ديال
mandate is not in
هذاك خونا
conflict.
جون
The labour
بول
market data of the last few months has confirmed that. Dan, do you think that is in their future?
Absolutely. I mean, it's going to get
and
really
the
hard.
economic
You've got
developments.
both inflation not cooling as fast as you'd like, and you've got unemployment rising. That is just, you know, not a good situation to have. As I've often, you know, said, you have to think of inflation like a cancer. You got to treat it. It's not pleasant, but if you don't treat it, it can metastasize and become a much
تقريبا
more
في هاد
acute and chronic
السيمانة
condition.
الجاية نهار الجمعة غادي يعنوا حتى
That is the
على
decision the Fed is
النسبة
making. That
ديال
is not an easy choice to
ديال
make, and they
سميتو
know it. And I
ديال
think that's the
التوظيف وديال
important thing is they
البطالة
know it.
وديال
That
الجوبس
said, that doesn't mean the politics
في
of this are
أمريكا.
going to
انت
get
هذا من
they're going to get a lot of blame
التقارير اللي
over the
كتعطى
next 6
تقريبا
months.
في
And
نوفمبر
skepticism right now around this
حتى هي
pivot. I just
كتلعب
after
دور
reset, we got this Fed decision,
Sure.
75 basis points. The market's treating this like a pivot. On
في
Twitter,
المارشي
still not a
ولا
pivot.
في
And
الأسواق
people are
المالية.
desperate. A pivot was when they
Suggested
cut.
labor
Here's
market
another one.
remains tight
Fed
despite
acknowledges
safety
reality, and that's a bull's pivot. LOL. Okay. And I do wonder, Scott, there is this incredible skepticism around the market response, and I do wonder how much this is just simply because they're just having a separate conversation, by the way, about what LOL means. But in the meantime, how much we haven't necessarily seen the balance sheet reduction actually feed into the markets. When do we actually see the effect of that? And is that draining of liquidity what's going to ultimately trigger something that feels more realistic, maybe?
I think so, Lisa. I mean, look, you know, Diane made some very interesting points, and that is that if we look at the economy right now, the first and second quarter contracted. The only reason the
لأن
third
دابا
quarter ended positive
المشكل
was
دابا في هاد
inventory accumulation, which
في هاد
is telling
الزيادة
you,
ديال
you know, the consumers already, you know,
ديال
in retreat. So, you know,
ديال
I think this
الانترست
is going to
يبقى
speed
يزيدوا
up
تاعيا وراه ما
at
باش
the end of
زعما
the day.
يحاولوا يحتويو
And, you know, I do agree
الانفليشن ولا
with
التضخم يبقى
what
يزيدوا
Diane
تاعيا،
said, that,
ولكن
you know,
داكشي
I think
غيخرج لهم على
prices would
السيطرة، يعني
slow
ديك
much faster than the
بحال شي
Fed
بالون،
because
بحال
the
شي
biggest
نفاخة
owner
كتبقى
of the
تنفخ فيها
Fed
تنفخ فيها
is,
تنفخ
you
فيها
know,
صافي
one of the
تيكليسالي
biggest
فيها هذاك
pieces in the PCE. You know,
ثاني اكسيد
everything
الكربون اللي
else
فيها
is
ولا ما عرفتش
slowing
كيكون فيها
down.
لداخل كتفرقع
It lags.
صافي، ما
So,
كتقدش
you
مازال
know, as
تسيبورتي
housing
هذاك
softens, we're going to see more downward
ثاني
pressure there.
البور اللي
So,
كاين اللي
you know,
لداخل
I
صافي
want to stop
كتفرقع.
short here.
اوكي،
I would not call this a
هو
pivot
تقريبا
today.
هادشي دابا اللي كدير هاد
You know, I
الفاد،
think
هاد
that you know, the
صندوق
slowing
النقد
of tightening is not an easy.
البنك الفيدرالي.
I think the Fed is just saying, hey, let's be careful and understand we have to get to the destination. And before they get to the destination, I think it's likely they're going to create a lot of damage to the economy and financial markets.
Scott, we can see that they're setting up the flags. It's about 5 minutes away from
يعني انت يقول لك بان التضخم ونسبة
ask him,
التشغيل ما
this
ملاقينش، يعني
represents
ما
a great
متوازينش
artful piece of
كما
language.
بروبان
I
be announced
salute
and
them for it.
anticipation
But at the end
so
of the
increase
day,
without contracting.
where do you see the terminal rate, and where do you see policy being restrictive enough relative to neutral before that you basically just say, hey, we're at
لأن آخر اجتماع اللي كان كان في شهر 9 كان قال لهم ودي راه سميتو بأن راه غادي نحاولوا نزيروا شوية في الشغل باش نحاولوا ما أمكن ما نخرجوا بأقل الأضرار، واللي سماه هو بسوفت لاندينغ. تيهضر لونجلي ولا تيفهم لونجلي يفهم شنو تنقول. دابا تيرفعوا عاوتاني لانتريست، يعني تيلعبوا هنايا داكشي اللي تيقولوا لي انا، قال لك لان هادشي اللي تيقول دابا هو قال لك تيتناقض مع داكشي اللي قال 6 سيمانات اللي دازت. 6 سيمانات فين تيهضروا على كانوا تيهضروا على الاجتماع اللي طرف بشهر 9. هادشي اللي تيديروا يعني لا علاقه بداكشي اللي قالوا في الميتينغ الاخر.
Those staffing shortages that are being created by the legacy effects of COVID, along with the acute shortages that we have, are costly even as wages plateau. And I think that's really important to remember.
ومن هادو بعض لي ستوك ماركت اللي طاحوا ولا نزلوا ما تيهمش.
We've got inflation with an economy that's slowing, but it also was underpinned by 3.8 million jobs. And I think at the end of the day, that's the part that they target.
هذيك 0.75 دابا بوان اللي زادوا بوزيتيف، يعني غادي نخترقوا ال 21 الاخوان. اوكي.
And on the Nasdaq too, up 0.6% there and thereabouts on the S&P 500. Elsewhere in the bond market, shaping up as follows: down hard at the front end by 8 basis points, 447. A dovish interpretation as the Fed tells you basically what the Fed had already told you. We can get to that in just a moment. On a 10-year, we're down about 3 basis points at about 4%.
John, I want to emphasize,
sure.
We were making jokes earlier that this is going to be a snooze fester. We were just going to go through it waiting for December. All of a sudden, I'm not waiting for December. I'm waiting for 10 minutes from now when the questions come in to Chairman Powell. It's going to be interesting.
You know, when you get the earnings and people start to trade and someone says, have you listened to the earnings call? And the call hasn't started yet. This is a two-part act.
Yeah.
And there's a new news conference that starts in 2 minutes, and it's going to be about the emphasis in that news conference. And can I also state that in about 10 minutes' time, about 12 minutes
كوين عندها واحد اليوم
scheduled to speak as well. So you're going to have this really odd dynamic where the Fed chair is talking potentially about the pains that will come in this economy, and the president, at least the counter programming ahead of the midterms, talking about an economy that's still doing okay.
Yeah, well, good luck. You know, honestly, I think that's really the question is how can he possibly counter program given that inflation is the primary concern for so many people, and that does seem to be the Fed's primary concern. How much was that additional comment thrown in there? Basically a nod to the moment of politics that we're in. How much they basically saying, look, they're taking
يعني ملي كيزيدوا واحد 0.75 بحال تيزيدوا يعطيو امل باش يحتويو هذاك الانفليشن ولا داك التضخم. كما قلنا راه واخا يعياو ما يديروا، راه غيجي واحد النهار غادي ياكلوا الطراو ديال الارض. بيتكوين باقي سيف. اوكي.
is completely another. That's going to set the stage for what 23 and the trajectory and the glide path into 2023.
I'll be very quick here. Mr. Dutta, Mr. Dutta right now saying on the statement today, quote, Brainerd's thumbprints. That's what Neil Dutta wrote.
I agree with you, and most people do.
نشوفوا واش بدا الاجتماع، مازال ما بداش. الجوج ونص هادي هو بدا الاجتماع. المقصود دابا
They've done a lot of work, Tom, in a short and they've done way.
نقصوا هذا ونزيدوا في هذا. هو متحدث باسم البنك الفيدرالي.
Good afternoon.
Good afternoon.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal.
بغا ينقصوا الانفليشن
We have both the tools that we need and the resolve it
2%.
will take to restore price stability on behalf of American families and businesses.
وعندهم جميع
Price
الوسائل
stability
المتاحة
is the
باش
responsibility of the Federal
ينقصوا.
Reserve and serves as the bedrock of our
وهي من
economy.
المسؤولية ديالهم اللي
Without price
تتحتم عليهم
stability, the
الاقتصاد
economy does
الأمريكي.
not work for anyone. In particular,
اقتصادنا
without price stability,
تيمشيش
we
على
will not
حساب هوا أي
achieve a
واحد.
sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet.
زادوا 0.75
Restoring price
باش
stability
ينقصوا
will likely
الانفليشن
require
ولا
maintaining a
التضخم 2%.
restrictive stance of policy for some time. I will have more to say about
مع
today's
الاحتفاظ
monetary
بعد-
policy actions after
بعد
briefly reviewing economic developments.
القوانين والشكليات
The U.S.
اللي
economy
غادي
has slowed
يديروا بها
significantly from
زمان.
last year's rapid
الاحتواء.
pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter
هادشي-
financial conditions.
هادشي تيهضر على الجي دي بي
Activity in the housing
والكونسيومر
sector
ديال
has weakened
نسبة
significantly,
الاستهلاك
largely reflecting higher
نسبة ديال
mortgage
الجي دي
rates.
بي ديال
Higher interest rates and
أمريكا
slower output growth
تيهمش.
also appear to be weighing on business fixed investment.
شي شغلهم هذاك حنا شغلناش.
Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and
مقطعات عندهم
September.
نسبة التشغيل.
Although
تقريباً
job
50%.
vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The
عندهم
labor
عندهم
force participation rate has
عندهم
little
طلب
changed
أكثر من
since the beginning
عندهم
of the year.
طلب أكثر من الدوموند.
Inflation remains
أكثر من
well
العرض.
above our longer-run
خاصة
goal of
الخدامة.
2%. Over the
هاجي
12 months
والمغرب.
ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, We will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Colby. Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement. Because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick Tamarosa, The Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, people who publish an assessment of underlying inflation.
Thank you.
Gina. Hi, Chair Powell. Thank you for taking our questions. Gina Smilek, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have, a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
وعشرين واللي خرجوا لنا على البلاد واللي خرجوا على العالم كامل.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The
رفعت
statement points
الأسعار
to lag times.
العالم
I'm wondering
كامل.
if you can walk us through how you
تشوفوا على
judge those
يدي
lag effects, what
اللي
that
منها
timeline looks like
كاين
over the
اللي
coming
بيتكوين
months or
جاي
even a
والأول
year,
تابعوا
and
الثمن
where
ديال
you would expect
الدولار
it to show
تابعوا
up in different
الاجتماع.
parts of the economy.
Yeah, so
الاجتماع كان متوقع ولا جميع الناس
the way I
كانوا
would think
كيتسناو
about
هذا
that
الاجتماع
is,
لأن هذا من
it's a commonly
الاجتماعات
for a
المعروفة.
long time thought that monetary policy works with long and variable lags,
اقتصاديا
and that it works
العالم كامل.
first on financial conditions and then on
والعالم
economic
كامل
activity, and then
كيصرف
perhaps
هذا.
later than that even on inflation. So
لكن
that's
عندك
been
علاقة
the thinking
بالاقتصاد
for a long
تعرف
time.
شنو هو الاف
There was an old literature that made
شو
those
تعرف
lags out to be
النوعية ديال
fairly
الاجتماع
long.
والدور ديالو والتأثير
There's newer
ديالو
literature
على
that says that they're
الاقتصاد
shorter. And, the truth
الأمريكي
is we don't have a lot of
والاقتصاد
data
الأمريكي
of inflation of this high
تأثير على
in what is
الاقتصاد
now the
العالمي.
modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation.
منتظر
Now,
الاجتماع واش
financial conditions react
غادي
well
يرفعوا
before
النسبة
in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the
بالنسبة
direction
ديال
of financial conditions, then monetary policy,
الاحتواء
because the markets are thinking what is the central
وإلا
bank
رفعوا
going to do?
النسبة ديال الاحتواء
And
التضخم
there are plenty of
الأساسيات
economists that also
والشكليات.
think that once financial conditions change, that the effects on the economy are actually faster than
ولا
they would have
بطرق
been
معينة
before.
باش
We
غادي
don't know
زعما
that. I guess the
يحتويو
thing
هذاك
that I would
الانفليشن.
say is it's highly uncertain.
وثاني
Highly
حاجة
uncertain.
هي
And so from a risk
نسبة
management standpoint, we
التشغيل.
do need, it would be irresponsible
نسبة
not
التشغيل
to
مقارنة
ignore them. But you want to consider them, but
التضخم.
not take them literally. So I think it's a very difficult place to be, but I would
مقارنة
tend to want to be
بالطلب
in the
والعرض.
middle, looking
الطلب
carefully at
والعرض
what's actually happening with the
ديال
economy,
سوق الشغل.
and trying to
الشغل
make good
باقي
decisions from a
طايح.
risk management
يعني
standpoint.
الطلب ديالهم
Remembering, of course, that if we were to over tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we
البنك الفيدرالي
don't make
تيدير
the
8
mistake
اجتماعات في العام.
of either failing to tighten enough or loosening policy
8
too
هذا هو
soon.
السابع باقي
If I
الثامن
could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this, it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive. And we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
وغادي نتاخذوا اجراءات بلا 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 دابا جايين تيعطيونا العكس داكشي اللي عطاونا.
As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of labor market, consumer demand, a lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is just very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. Sorry, was I getting to your question there? Housing, the housing part of it. Yeah, so, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that that's really where a very big effect of our policies is.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line, but so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some raise of light inside that. If you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening. is happening, and maybe that's there, but it's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see, we would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, and that the data series is volatile. We never take any one reading. We always look at 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we have it, and we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
وفي النسبة ديال التضخم وهذا هو أكبر اجتماع اقتصادي
the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, you know, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep, you know, longer-term inflation expectations anchored and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell, Janelle Marte with Bloomberg. So the Fed is facing 2 more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, you know, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that. So that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted. And also, you have to look at why why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up. You also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that risk assessment has changed a little bit?
Well, what's happened is time has passed, and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right, but if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates. And I don't know what we'll do when we get there. By the way, it doesn't. We'll have to see. There's been no decision or discussion around exactly what steps we would take at that point. But the first thing is to find your way there.
Thanks, Chris.
Thank you, Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year, and so forth, but none of this is really showing up in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases, and that makes sense actually, because for that reason, that conceptually that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline. There's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another, they go up, and, that'll end when it ends, but there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
In theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. So I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, people are, the banks that deal with retail customers, and many retailers will tell you that the consumers are still buying, and they're still, they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
It's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects, although I think overall I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is, and we know what our tools can do, and that's how we think about it.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Bravo.
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path.
عطاتو نفس الجملة اللي كان قال في شارك
path
ساوت
is narrowed
كان
over
قال
the
لهم
course
راه
of the
السوفت
last
لاندين
year.
زعما راه
Hard to say.
تكون أزمة
Again,
اقتصادية ولكن
I would say that the
نحاولوا
sort of array of
نجيب
data
شوية
in the labor
نخليوها
market
تجيب
is
شوية.
highly unusual,
تكونش-
and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. the implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now, and it really hasn't. Although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
إذا الإخوة الأخوات، كان هذا هو اجتماع ديال البنك الأمريكي الاحتياطي، أو ما يسمى بالفيدرال ريزيرف، في اجتماعه السابع قبل الثامن الذي سيأتي في 13 و 14 ديسمبر. اجتماع خلص برفع 0.75 كما ترون هنا في بلومبيرغ، مما يعطي حدود أكثر للدولار لكي يصعد إلى الأمام، وكما ترون فهو في صعود، ويعطي أخبار سلبية وغير مفرحة للعملات الإلكترونية بالهبوط والنزول للأسفل. هاد الأخبار هذه كانت شوية قاصحة على الناس اللي كتسنى دابا أن الكريبتو طلع مزيان وتزيدو ديباسي 21K ولا 21,000، إلا أنها فاجأتهم وفاجئهم هذا الاجتماع بالرفع النسبة ل 3.75 أو 75%، يعني من بداية 2020 على حسب ما قال هذا جو بول كانوا زادوا في النسبة بحوالي شي 300 وشي حاجة نقطة، اللي هي بزاف من بداية يعني البانديميك ولا الجائحة. شي خدام دابا هادشي.
To what extent you do and don't draw a signal from that?
نعود نأكتواليزيو هذا لأن الاجتماع سال هذا باقيين.
Has got narrower. The terminal rate is higher than we previously thought it would be. And there was a fascinating moment in this press conference right at the very end when a journalist wrongly misled Powell into believing that the market was still rallying. And we were getting real-time insight into what the Fed chairman actually thinks about that. And Lisa, he was leaning hard against it and doubling down on pretty much every single hawkish aspect of that presser.
Okay, so we looked at each other. We couldn't believe it because he just went out and the question was, how do you feel? What's your impression? The market is up, but it was down at the moment. And Fed Chair Powell came out and said, again, we're going to end up at a higher level than we previously thought because inflation is hot, and went through the balance of risks, still that they do too little rather than too much. They're not worried about overshooting at this point. There is no evidence of that. And he went through this, and you can see now the NASDAQ at session lows, 1.85%, as he really emphasized that point.
We got a ton of research going into this meeting. We were all talking about the Federal Reserve opening the door to smaller rate hikes. How could they do so without triggering a premature easing of financial conditions? And Mike Gapin over at Bank of America said this a week ago. We think the Fed can be successful in pushing back against any interpretation that a slower pace of rate hikes implies a lower terminal rate or a quicker pivot to rate cuts. In other words, it is now about the destination. It is not about the journey. Mike Gapin of Bank of America joins us right now. Mike, you and the team absolutely nailed this one. Your takeaway from this presser?
Thank you, Jonathan. And exactly what you said, which is, we're getting further into restrictive territory. There's lags in terms of monetary policy and its effects. So risk management says we should slow. But don't take that as an interpretation as we're not committed to doing what we need to do. And we need to get policy into restrictive territory. It needs to be there for a while to bring inflation down. So don't focus on the pace anymore. That was the catch-up phase. We're past the catch-up phase. Now it's about the ultimate destination. And we don't quite know where that is, but as the chair said, it may even be higher now than it was when the committee met in September. So yes, it's about the destination, not the journey.
Okay, I'll go with that, and it's modern talk. But Michael Gapin, what I heard there was a traditional cautious chairman reading off carefully written text against the Brainerd statement of cumulative tightening. Bring those two concepts together. Take Brainerd's cumulative tightening and link it to what we heard from Chairman Powell.
Yeah, the statement leads now with the phrase, what's the goal? The goal is to get monetary policy restrictive to bring inflation down. And so what's restrictive? Well, that's dependent on cumulative tightening, the entire body of work that we've done to tighten financial conditions from earlier this year until today. Now, we've gotten a long way along that, and it's easier to move rapidly when you're coming from zero to something that's controller tight. And so now you can slow the pace, but remember, it's about the cumulative effect of what we've done. We're not going to know that for some time.
Well, take the nonlinearity of that. We've gotten comfortable with 75 basis point moves, 0.75%. Is the nonlinear impact now of 50 or 25 basis points somewhat equivalent to 75 beeps a number of meetings ago?
Right. I think that's the idea, that the more restrictive you get, you think kind of the more could cause like a hard landing in some parts of the economy. So it becomes more nonlinear, and it's about the action you take today, but also about what that action implies about what you might do tomorrow. So I would agree with that. So 50 seems like where they could end up in December if the data allows, but again, that could just mean a series of 50s if the labor market doesn't slow down.
Did this press conference, Mike, make you rethink the terminal rate, where the Fed ends up next year?
Yes. I mean, we're in the 475 to 5 range, so we were above where the median member was in September. So it's conceivable that inches up and, kind of into where we're thinking. But we've always said the risk is right now for the Fed is that the domestic economy has momentum, and reopening is swinging activity to services in a way that comes with a lot of employment. And the Fed chair said, yeah, housing and other interest rate sensitive sectors are slowing down, but that labor market is still out of balance. So I think the risk is they ultimately have to do more than we're all thinking, and it takes longer to bring inflation under control.
Mike, I can't let this go. That was one of the most revealing moments that I've seen in a news conference in a long, long time, where the Fed chair is sitting there believing that the equity market was rallying in response to what he had to say, wrongly misled to believe the equity market was up when it was down. And as someone just wrote to me moments ago, he gave us the hawkish greatest hits in response to that question. Mike, how revealing was that to you about where this Fed chair thinks this market should be?
Well, I think, to be fair to Chair Powell, I think the point is the equity market is part of a set of variables that tells him where financial conditions are. And so, yes, it would be inconsistent with what the Fed's trying to do for equity markets to rally substantially. It would indicate that financial conditions have eased, and that's not necessarily what the Fed's trying to achieve. So I'll be generous and back to him just because I know it's tough to do it in real time.
The takeaway for many people is the risk of doing too little outweighs the risk of doing too much. He broke down that several times, and he said this: if we over-tighten, we can support the economic activity. If we under-tighten, the risk is inflation is entrenched, and that's a much bigger problem. Now, Mike, what he didn't say is the damage that would be done if they over-tighten. How much damage would be done? And Mike, it's easy for us to say that unemployment's going to go higher and people have to lose their jobs, so long as it's not our jobs, right? And Mike, that's what's always difficult about this conversation. What is it, a recession if someone else loses their job, and a depression if we lose ours? And Mike, I think this is a very sensitive moment for a lot of people. You've got a Fed chair talking about pain that we can correct and cut interest rates, etc., etc., etc. Mike, it's going to be a very different moment for this Federal Reserve when we actually see the labour market breaking down and we see the dual mandate in conflict. Do you truly believe that when that starts to happen, this Fed will stand by and won't cut interest rates?
If it's, let's call it a relatively mild downturn by historical standards, meaning we're not getting job losses on the order of several 100,000, which might indicate to them that they've course corrected too much. I think the answer is yes. Just remember where they're coming from. They think long-run inflation is determined solely by them. And they're offside on that part of their mandate. So it's on them to fix that. And they believe correcting it sooner will entail less pain than correcting it later. You're exactly right that we don't want to be flippant about anyone losing their job in this world. But our job is to reflect back to you and your viewers about what the Fed is saying. The Fed is saying it wants to correct imbalances in the labor market, which would require a higher unemployment rate. So that's effectively what they're trying to do in order to bring inflation down.
Michael Gapin, is your study of Fed history that they actually pay attention to rents in the general broader housing market?
Yes, as a component of where inflation is and where inflation is going, there's a large number of people who sit in Fed staff and residents at the board who break down every individual subcomponent of inflation and feed that information back to the committee. So there is a top-down view and there's also a bottom-up view, and you can bet that they are talking extensively about rents and housing inflation.
إخوان غنمشيو ل 19,000 من بعد 18 من بعد 17 من بعد 13
clients, but how
أنتم
did this
كتشوفوا فيها
amend
الآن
your view of the December meeting?
I would say not all that much. I mean, we were on the high side, at least relative to the median member, in terms of looking for the terminal rate. We were thinking the Fed would step down to a 50 basis point hike at the December meeting. They seem to have opened the door for that. So if the data cooperate, I think that's where they're headed. So not a big change. Although I would say he emphasized risks in the direction of higher rates more than we had anticipated. He mentioned twice that the September data, if released today, would likely be higher. And so to me, I don't think that's a casual statement. Mentioning it twice, I think is important.
Yeah, it definitely felt like it was a very deliberate, what did you call it? The greatest hits, the hawkish greatest hits?
Not my words, someone else's words, but I'm just looking at the dot plot from last time around, Lisa. For 23, they went from 380 in the June projection to 460.
Yeah.
That was a big jump. And you've just had the Fed chair tee up another big jump at the December meeting.
Yeah, and honestly, Michael, I've got to give Bill Dudley another victory lap because he nailed this early in the year and at the end of last year, I believe, saying that he could see a 5 to 6% Fed funds rate. And here we are. I'm looking at the NASDAQ right now, down 2.7%. Michael, what are you looking for in the CPI report to indicate
للأسف
how much
غنرجعوا
further
تحت
this Fed
20,000
Reserve has to
دولار
go and how
وتحت
long it has to hold
19,000
rates
دولار.
at that elevated level?
Look, I think it's a three-part story. You need at least some relief on commodity markets. The Fed chair, of course, acknowledged today they don't have full control over that. They'd like to see some durables components like autos start to roll over. And with the lag, services, it's going to come down. So really the first part there is getting payroll employment down to at least 70,000 a month, perhaps a little bit less, in order to alleviate pressures in services prices. And if I could add one more, a year ago, someone by the name of Ethan Harris, who runs global economics here, said the Fed would be tightening at every meeting in 2023.
Yeah.
Sorry, 2022. Let's not go that far.
Sure.
Every meeting in 2022, and I think Ethan deserves some kudos for that, too.
I think he was laughed out of the room at the time as well, Mike. He really was. Mike Gapin, thank you, sir, of Bank of America.
Thank you.
What a change of this Federal Reserve. If you're just tuning in, you missed the fireworks. So we got a 75 basis point interest rate hike. We got some kind of statement that implied the step down was coming, which is what many equity market bulls were looking for. Then the press conference started, and the Fed chair lent hard into this idea that it was no longer about the journey, it was about the destination. And credit to Mike Gapin of Bank of America, who just provided a roadmap going into this meeting of exactly what we get in this news conference. Mike McKee, you were in that news conference. What did you make of that one?
الأوردرات البيع وأوردرات الشراء والمناطق اللي الناس حاطين فيها الأوردرات باش يشريو يشريو. كاين هنا هنا في الأحمر بزاف 20% إلى برنامج بحال هكا غتشوف بأن الناس كتسنى الأوردر بكام
each month. By definition, the Fed is behind in terms of the terminal rate because they're at 4%, and even they said 4.6. Now, Powell says it's got to go up. We don't know where it goes from there. So he's not telling anybody anything new here. They're likely to raise that rate to match at least what the markets are saying, but that's the point. They want people to focus on that, and that gives them maybe some flexibility to spread things out. They don't pause yet. He said that was clear, but they maybe come down so that they can get a little bit better read. Now, the thing he said over and over again is that we've got a ways to go, and I think that's going to be the new watchword.
Michael McKee, you and I know that every central bank, and particularly major country central banks, are haunted by how the Japanese got the rate call wrong a good 20 years ago. Justin Wolfers wrote up on Twitter, the wonderful professor at Michigan, about the asymmetry that was discussed today. Is this a Jay Powell who's saying, I'm not afraid to make the mistake the Japanese make, and if we overshoot and become too restrictive, we've got the confidence to turn around?
Well, I think he's saying we're not going to make the mistake of ending too soon, which is more than just Japan. The ECB had that issue, and of course, the United States Federal Reserve in the years before Paul Volcker under Arthur Burns. So they've made that clear all along that they don't want to make that mistake. Now, the question is, as you and Michael Gapin were talking about a few minutes ago, when you get to a point where the unemployment rate starts to go up and you start to get the kind of political pressure that we've seen from Democrats up on Capitol Hill, do you feel maybe you need to back off a little bit? And Powell's trying to thread the needle in saying we are not going to back off, but maybe we can back off a little bit, justified by the economy and not by what outside political concerns there are.
Mike, in that news conference, there was a commercial for Bloomberg Anywhere because there was a journalist that clearly had dated equity market pricing who thought the equity market was up when it was down. And he led the Fed chair to believe the equity market was rallying. And Mike, the Fed chair pushed back so hard against it afterwards. It was so revealing for me, Mike. I just want to understand from your perspective, you were in the room, what you were thinking when that was going down.
Well, I would also be charitable as Michael Gapin was and say it's hard to do in real time. He doesn't have the monitors in front of him when he's doing the press conference. Bloomberg is back in his office, and so he doesn't know what's going on. And he does know that markets can turn around on a dime, and that anything he says can be a reason for markets to change direction. So I'm not going to hold that against him. I don't think he's not paying attention to how the markets are reacting to what he's saying.
Just to be clear, this is not a dig at the Fed chairman. I actually think this is incredibly revealing, Lisa, in the moment. If you're an equity market bull and you've just watched what's just happened,
right,
you've got real-time insight into what a Fed chair thinks about a market rally based on what he's just said. And he doesn't like it.
Right, but that's exactly the point, right? The Fed is basically saying, the market can do what it wants to do, but guess what? We're going to hike more than you think. And guess what? We're not worried about overshooting. Mike, how much is this basically the hawkish pivot or the hawkish swivel or the hawkish get to a higher level, but perhaps do it more slowly that people were not expecting, although they kind of were expecting, but markets now are reading as probably somewhat negative for them?
Well, again, I think
كما قلنا
I
الإخوان
would join Jay
البيتكوين
Powell pushing
غادي
back against looking at the markets in
تحت
this
20,000
case because
دولار.
it's an immediate reaction and it
عندنا
sounded
19
hawkish. We're going to get a lot
و600
of data
ثم
going forward.
19
We've got
600
jobs
ثم
on Friday. We've got CPI next week. We've got 2 more of those reports coming up before the Fed meets
ثم
again.
18
And so the markets will continually reprice as we go through. Layer on top of that all the rest of the Open Market Committee who are going to be speaking between now and December 14th. And you'll see a lot of views change. But I think maybe what the Fed hopes it accomplished today is that the focus will be on, well, when they come out with a new dot plot, what's the terminal rate? And then the question becomes, how long do you leave it there, rather than are we going to do 50 or 75 or even 25?
Mike McKee, you're so diplomatic as always. Great work, sir, in the news conference today. Mike McKee, just one of the best. In fact, he is the best in that presser. The Fed decision behind us, TK CPI, the next stop. November
huge.
10th.
It's huge, and I want to make clear we were making jokes about a snoozer, and this was not a snoozer conference. But John, I'm going to go back to the idea of cumulative tightening, of what Lael Brainerd is known for, and I was stunned that was not addressed more in the press conference.
Let's get to Jeff Rosenberg, the Senior Portfolio Manager at BlackRock. Jeff, you've had the luxury of sitting there, listening to the news conference, had 10, 15, 20 minutes to digest it all. Your reaction to it?
Yeah, Jonathan, you've mentioned a couple of times now, sitting here listening to you about that moment, and I absolutely agree. But even before he went to the moment of answering the journalist's question about the markets rallying, he had illustrated those same points earlier. The market rallied after the statement, and he preemptively had the 4 points that he had planned to address that. And it's very telling, as you've laid out, that the Fed does not want to see a replay of what we saw in July. It does not want to see premature financial condition easing on the signs of any Fed pivot. And they were very explicit there. And so we've seen that very clearly. And that is one of the key takeaways from today when thinking about kind of the near-term impact of today's meeting. And I think that's very important, and you've highlighted it a number of times so far.
Jeff, does it change your call, or maybe you can speak for all of BlackRock, your duration call in the fixed income market? As he said, we're farther along, and part of that is ample nominal rates, a legitimate real rate. But does the conversation today change your confidence in extending duration in fixed income?
Well, Tom, as you know, I'm going to speak for our portfolios in systematic fixed income. But the key point here to take away is one that Powell did say is they've come a long way very quickly. That first issue of how fast has really been addressed. Yeah. And conditional on what happens to the inflationary outlook, we're closer to the end point. Yes, he highlighted in one of those hawkish points to push back against easing of financial conditions. You're expected to see a step up in that S&P statement for the terminal rate. But remember, we've already priced into the bond market around a 5% terminal rate. We've come off the peak of that pricing, but we're mostly reflected what we expect to get out of the Fed. Now, again, that's a conditional statement, so if inflation keeps surprising, we've got more to go. But the good news here from a fixed income perspective, from a duration perspective, from the outlook for fixed income returns is a lot of the damage has been done. You're starting the forward-looking outlook at a much enhanced coupon level. And it's that coupon level that was missing at the beginning of the year that really undermined the performance of fixed income. When we look forward in 2023, you're starting at a much better level. You may still have further increases in interest rates to go, but you have a lot more cushion in the fixed income market. It raises the outlook for positive returns in 2023 relative to the historic negative returns we've had this year.
Jeff, to stay narrow then, do you assume a constructive curve flattening where we see some real value to more long duration assets price up, yield down?
So my statements before were really about the level of coupon income. And right now we have an inversion in the curve as you look further out. It's reflective of an expectation that the Fed will over-tighten. A lot of the questions that we just heard about, that they may have to cut rates. We'll see whether that shows up. But one of the challenges that we have to really think differently about in fixed income is the role of longer maturity, longer duration as a portfolio hedge to my equity portfolio. In an environment of substantial inflation surprises and persistence in that inflation surprise, that may undermine the role of longer maturity duration coming down as aggressively as it had been expected to and delivered over the last 20 years. So what we're seeing here is really a shift in the relative value across the curve. The shorter end of the curve is looking more attractive. It offers higher yields, less interest rate sensitivity, and you're not giving up as much of that duration ballast because that duration ballast may not be as strongly there because of this inflationary and uncertain environment.
Jeff, just to sort of put a bow on that, are you saying that we haven't seen peak yields for the 10-year Treasury, that we could see substantially higher ones, and that it's a much surer bet to go into that short end because of that?
I'm saying that there's a risk that we haven't seen the peak in terms of longer-term interest rates because of that inflationary uncertainty, right? We've persistently expected inflation to fall, and we've been surprised. So you have to be a little bit humble about what we really understand. Some of the questions that the chairman got today about the inflationary setting process, and the point that he made that we're 18 months into this. The longer that proceeds, the longer that persists, the greater the risk that it becomes persistent. And so that uncertainty should at least be incorporated when thinking about the longer end of the curve. It tempers some of our enthusiasm for going out the curve, whereas the higher yield levels and the lower interest rate sensitivity in the front end makes it a more attractive place clearly for today.
Just to give you a sense of the nominal levels, the 12-month Treasury, the T-bill, is now giving you the most going back to 2001, just to give you a sense of the size and scope. I'm also looking right now at Fed funds futures, which are now pricing in a 5.1% Fed funds rate by April and May of next year. Jeff, how much are you upping your expectation of where the nominal rate will end up, where the Fed funds rate will end up next year based on what we just heard from Fed Chair Jay Powell?
I'm not upping my terminal Fed funds rate forecast relative to the numbers that you just said from the market. I think around 5% for what we know today is right. What Powell told us was that the SEP will catch up to those levels, and we should expect that to be reflected. Whether or not that's the right terminal rate, however, really depends on the inflationary trajectory. The consensus forecast is for, again, that to decline, and therefore that terminal rate should be correct. But I would be a bit
إلى فيديو آخر إن شاء
cautious
الله
about
بحول
whether or
الله
not that consensus
وغالبا
view is
غنديرو غدا ولا بعد إن
correct.
شاء
It's
الله
persistently been proven to be incorrect.
Jeff, what do you make of this market move?
السوق إن شاء الله.
And are you willing to buy this market, risk assets, in the face of what you've just heard from this Fed chairman?
Well, it's very interesting about the risky asset, the stock market reaction to today.
إذا تحياتي
relative to the
الإخوان
bond market.
مع
Bond
السلامة
market kind of
ونهاركم
round
مبروك.
trip